and welcome back to the 𝗥𝗲𝗅 channel, where we discuss issues and trends facing the oil and gas industry. If you are new to this channel, kindly like, subscribe and share to stay updated with the current trends. So today, once again, we have with us Mr. Pranav Kant, a veteran of oil and gas industry and an expert in strategy and marketing. So how's your Saturday going so far, sir?
It's going great. We are living in interesting times and weather is turning better. So all good.
All right. Good to hear, sir. So starting off with my first question for you, crude prices have started moving up again after stabilizing last week. Experts are talking about it touching $130 to $140 range in the immediate future. What are your views on it, sir?
Yes, the crude price as at this moment are hovering. We are looking at the Brent, which is at about $119.4 to a barrel, so which is 120 range, which is an increase over the week back. But to imagine it to be going into touching the 130 and 140 barrels in the near term would be a little bit optimistic. So we need to really temper that view with what is really happening onto the one is the supply and demand balance. And that's where lots of the data points or the news tends to go under the radar. Because currently, as we see, the biggest issue behind the bullish price forecast is the upcoming EU sanctions to ban the Russian oil in their next meeting, which is scheduled for May 30th and May 31st. So there are lots of hopes that this ban will actually come through. But we hold the view that this would not be as conclusive because Hungary has made its position very, very clear. And so has Czechoslovakia, Slovakia, and few other republics. And for the rest of the people as well, it's not as very clear. So we remain kind of on the side of not expecting a conclusive ban on the Russian oil by the EU in its upcoming May 30, not in the manner it is being talked about in the media. So already what we are seeing is the pipeline imports would be exempt, and it would be the seaborne import which would be the larger focus of this current ban. But to what extent and everything, we would hold our final views, but we remain less than optimistic on a very comprehensive ban.
Okay.
So we expect the prices not to be reaching 130, 140 in the summer, as most of the analysts are forecasting, but to continue to hover within 115, 120, at max going to 125. And with a significant risk onto the downside, but that would be a topic for another day.
All right. That's interesting. So moving on to my next question, with driving season starting in the US and demand picking up in China, is there any possibility of increase in production by the present suppliers?
Very interesting question. And these two questions I'll take, one by one. So first, let's focus on to the upcoming driving season and the requirements. So, and of course, it has a link to the retail gasoline prices. But what we are here discussing first is whether the crude supplies are likely to go up. Now, that is the most crucial part of the question, because as we have seen in the recent times, the OPEC and OPEC Plus, they are completely aligned. When we say they are completely aligned, OPEC against its targeted production level is below 2.6 million barrels per day. So the OPEC is not obliging the oil markets in the West to the extent of increase in production, what it is capable of, because it tends to, it gives an impression that it wants the current situation to go along with it. It's at a very balanced level from the OPEC point of view. Prices are high, production are not really going up, and they don't want to disturb that apple cart. That is at one level. And second part of your question is about China, the demand, likely upward trend in the demand with the likely easing of the zero COVID policy lockdowns. Here again, we remain little bit of circumspect in anticipating very quick turnaround back to normalcy in China. We anticipate it to be a more tapered down affair, and it would take about a quarter for things to really normalize to anything of the pre-March level. So we expect things to remain bearish on the demand side, and OPEC continue to hold its current production level, which means there would still be a significant gap in what they have committed to be the targeted production level and the actual production level. And at the same time, we should not forget that the oil market is actually supplied pretty much in balance if one looks at the non-headline data points, one of that being the Russian crude, the shipborne crude, is at an all-time high level. And one interesting data which our viewers would find very interesting is as much as 1.65 million barrels of Russian crude, seaborne crude, is going stealth, which means the destination is not known. So all that crude at some level is ultimately entering the market. Under what name and in what context, we do not know. But all these would keep any hopes of increase in the supply side from the OPEC, I guess, on hold. So we expect more of the current supply situation to continue, and the prices to hover within a tight range currently. We do not see it really moving up very quickly, very fast.
All right, these were some great insights you shared with us. I'd like to thank you for being here with us. It was a pleasure talking to you.
It's been a pleasure.
Yeah. Thank you all for watching. Kindly continue to show your support by liking and subscribing to the channel. Stay tuned for more.
Thank you.